Imagine this. Your client experiences a loss to their construction project. They file a claim and eagerly await payment, only to find out their loss won't be covered as they expected. Then you discover they're not getting paid because of an error you made during policy issuance. Before a nightmare like this becomes your reality, take these 6 steps into consideration so you can avoid some of the most common pitfalls that happen during the policy issuance process. Number 1, know the product you're selling. Number 2, educate your client on the product. Number 3, have your client prepare an itemized construction budget. Number 4, choose the right policy. Number 5, always get the builder's risk application signed by your client. And number 6, check in with your client during the policy term. Let's talk about them. Step 1, know the product you're selling. It seems obvious, but the details are often overlooked. Educate yourself first on all the basics of the Zurich Builder's Risk Plan, including appetite, eligibility, when coverage begins and ends, and more. From there, dig into details like how to calculate percentage complete, the difference between actual cash valuation and replacement cost, the additional coverages and endorsements we offer, plus the coverage exclusions and restrictions. I know, it probably seems like a lot, but having this information in mind means you can feel more confident knowing you've presented all the options to protect your client's interests. We have dozens of videos about these topics right here on our YouTube channel. From deep dives on our Builder's Risk product to tips and tricks, it's your resource to build a strong knowledge foundation. Take a look around and don't forget to subscribe and turn on notifications to make sure you're staying on top of all the latest insights. Step 2, educate your client. So now you've educated yourself. The next step is to introduce your client to the ins and outs of their builder's risk policy. It's an opportunity to demonstrate the value you offer and help ensure they understand the scope of coverage. The more information you can cover up front, the fewer surprises there will be along the way. Don't forget to discuss co-insurance, coverage exclusions, and the occupancy clause. Many claims issues result from misunderstanding these specific topics. Step 3, have the insured develop an itemized construction budget in line with the policy limits. This might be a topic you don't hear enough about, and it can spare your clients time and headaches if a claim occurs. When a claims adjuster reviews the policy after a loss, they will send documentation for the insured to complete and request a copy of the construction budget. By preparing this itemized budget and thinking through all the details in advance, you save you and your clients from a misunderstanding about the extent of their coverage. It'll also help them avoid more frustration and could reduce the likelihood of claim issues or payment delays. Step 4, choose the right policy. This is another one that might seem obvious, but considering all the details involved in your client's builder's risk policy, choosing the right option for their project needs is a vital step. Is it new construction? Is it remodeling? How does the carrier define the difference? For example, did you know that if a builder takes over another builder's project and it began as ground-up new construction, it might not be insured as remodeling? In this example, the project would go on the new construction policy and the percentage completed is calculated. Remodeling policies are for projects that have been previously completed and are now being remodeled. How about the decision between one-shot reporting form or even a deposit premium policy? If it's reporting form, do you select monthly or annual reporting? Depending on how long your clients need coverage, you may discover that choosing annual reporting could save them money. This is another factor to discuss with your clients so they know what coverage they're getting and why. Now, that brings us to a big one. Step 5, always get the application signed. Document, document, document. It's a mantra we want you to adopt because it could safeguard you if a loss occurs. For policies secured online, this is especially important as we don't receive nearly as much documentation as we do if it's a deposit premium or large commercial policy. Keep the signed application in your records. Zurich will request a copy of the signed app from you in the event of a claim, and when securing your policy online, a PDF of the application is presented along with the quote on the issue summary screen. And if you work directly with underwriting to secure coverage, just keep a copy of the application submitted to the underwriter with your client's signature. Step 6. Check in with your client during the policy term. While it's always a good idea to confirm your client's coverage needs haven't changed, it's especially important in today's economy. With the rapidly changing cost of building materials, project values can change just as quickly. Make sure you're reaching out to your personal and commercial lines clients on a quarterly or semi-annual basis to inquire about their projects and update policies to reflect coverage changes. And if their policy is coming up for renewal, check in with them to see if they need more time. So there you have it. These 6 steps will help you avoid policy issuance pitfalls and some tough conversations with your clients. Ready to submit your next Zurich Builders Risk application? Check out our tip sheet for underwriting guidance during the policy issuance process. You'll see the link in the video description.